Hello and welcome to the Young Turks Dream Decade. I'm Shireen Bhan. Over the next 30 minutes, we revisit one of our young Turks who's also had a dream decade. On the YT tutorial, we give a young startup a chance to be tutored live on television. And on the YT Buzz, we tell you about everything that's hot and happening in the world of entrepreneurship. This week we revisit Puneet Dalmia, the Managing Director of Dalmia Cement and our young Turk from 2008. Since he took over the group, Puneet, along with his brother, has managed to treble revenues, crossing over $1 billion. He's now on a mission to conquer Mount Everest. That means he wants to take the group revenues to over $10 billion by 2015. Shruti finds out just how achievable Mission Mount Everest is.
A pioneer in cement manufacturing, Dalmia Cement Bharat began operations in 1939. And more than 70 years later, its managing director Puneet Dalmia has taken the company's revenues to over 2,000 crore rupees, making it the second largest cement manufacturer in South India. Expanding its footprint to East India with Orissa Cement Limited, the company's steady 33% growth rate for 5 years has attracted big-ticket investments. Inking a 500 crore rupee deal with US private equity major Kohlberg Kravis Roberts in 2010, Puneet is now focusing on increasing capacity as well as market share and hopes to make Dalmia Cement one of the top 3 cement companies in India. When we last met you in 2008, you spoke about your mission Mount Everest, which was to touch $10 billion in 2015. How close have you reached to that target?
Our first milestone was to reach $1 billion in sales by 2010.
Yeah.
We actually ended up with just under $1 billion. We ended at around 975. So I think we were quite close to our first milestone.
Sure.
I think in terms of looking at the 10 billion by 2015, given the fact that there was a global meltdown for a couple of years, we had to adjust our plans a little bit. So we are a little bit behind schedule, but I think we will have a significant scale up in the next decade.
Take us through the manufacturing capacity of the plants that you have and what are the plans to take it forward?
Our total capacity across the group in cement is about 14 million tons. We would like to be a 30-40 million ton player, somewhere in that range. And of course, I'm just giving a directional target. You know, India will probably be, 600-700 million tons by then. So at least we want to be somewhere between 7 to 10% of the market.
What are your expansion plans as far as the sugar business is concerned? How robust is that business looking?
Sugar business is a over-regulated business in India. I think there's a lot of political interference and investors get concerned when there is over-regulation. So I think we are a little cautious in terms of how we are approaching this business. We really like the power business within sugar. But if you look at a pure play sugar business, the returns do not justify the capital which has been deployed in the business. I think there are serious policy issues in this sector, and we would like to engage with the policymakers, which we are doing, to see how we can deregulate this sector over a period of time and ensure that the volatility in this sector, which is created by political interference, gets a little bit reduced.
So will you be looking at acquisitions in the sugar business?
We have tried to look at some acquisition opportunities. We have not found the asset quality to be right, but we continue to look at the right business model. I think that is our bigger challenge as we speak.
You've stayed away from acquisitions on the cement side. Are you now open to inorganic strategies as far as the cement business is concerned?
Absolutely. With the KKR deal, I think our mindset has changed, and we think apart from greenfield, we will look at inorganic opportunities as well.
Now let me talk to you about the power side of the business. Where do things currently stand and where do you plan to take them?
We have two types of power business in our portfolio right now. Both are very small. Our thermal power business is about 100 megawatts, and most of that is captive. And we have a very small renewable play, which is wind and solar. Okay. So we are doing a 10 megawatt plant in Rajasthan in the solar space. My own sense is we have created an enabling structure right now for the power business. Our captive capacity is likely to grow in line with our cement capacity. And other than that, we are developing a project where if we can get any captive coal mine, we will develop a thermal power business. But we don't have ambitions to be a top 5 player in the thermal power space.
Yeah.
It will just be an opportunistic investment because total market will be 2 lakh megawatts in India.
Yeah.
And I think you can deploy significant capital. And it is synergistic with our skill sets, project development, mine acquisition, and then, commodity type play.
Okay, so cement, sugar and power are the three businesses that you're expanding significantly in. When we last spoke to you, you also talked about how you miss not having a presence in the services side of the market. Has the family council come up with a decision of what you could possibly do on the services side?
I think that's where my heart is.
Yeah.
But as of now, I think we are in a mode of consolidation. We have expanded quite a bit, and we need to make sure that whatever we have promised, we deliver on that. Systematically, at this point in time, we are not looking. But maybe 12 to 24 months from now, we will probably be more clear about if and when what to pursue.
And exploring business ideas is not new for Puneet. Way back in 1999, after a 2-year stint at Dalmia, 27-year-old Puneet decided to experiment with a business of his own. He started jobsahead.com, an e-recruitment site, at a time when the dot-com bubble was about to burst. But Puneet managed to stay in the green and ultimately sold the portal to Monster.com for 40 crore rupees in 2004 to return to the family business. A voracious reader, Puneet believes it is the experience of setting up and running a new economy venture that has helped him transform his family business into a professional organization.
We have been able to attract better talent. We have been able to put better systems in place, and we have been able to create a very good foundation which will allow us to scale bigger.
How has Puneet Dalmia evolved over the last decade?
The biggest change for me has been humility. I think youth brings a lot of aggression. Youth brings a lot of hopes. And I think you have to be practical about what can be achieved in what period of time.
So do you miss not having an entrepreneurial startup in that sense?
I think that's a great question. I was reading an African proverb recently, and it said that if you want to go quickly, go alone.
Okay.
And if you want to go far, go together. So in a totally entrepreneurial startup, I think you have a lot of freedom. You can do whatever you want. It can be very quick, very fast decision making. In a family setup, I think you sometimes have to build more consensus. It sometimes takes time to take decisions. But I think in the long term, it's a very sustainable business model. I'm seeing that I have certain strengths. My brother has certain strengths. So in a singles game, you can do so much. In a doubles game, I think you can do much more.
Every business that you're currently operating in is a regulated business. Political in nature, takes time, needs a lot of government approvals. How do you deal with the fact that you're operating in such a regulated environment?
I think, government has also realized that development gets them re-elected. So most wise governments are pro-economics now. My favorite example is the banking example. You look at, complete deregulation, look at what it did to the world. The whole world was in an economic crisis.
Yeah.
India was being criticized of not opening up, etc., etc. And then India was being praised for, being more cautious in its, calibrated approach to opening up. So I think many of the things in India are frustrating at times, but if you take a long-term view, if you take a national view, I think it is perhaps the right strategy.
So what are your revenue targets for FY11, FY12, and how close are you to the aspiration of having a 10% domestic market share?
So in the markets that we operate, we have 15% market share. There are some new markets that we have entered where we have 4% market share, 5% market share. I think we are scaling that up. So I think we are doing reasonably well.
What about your rockstar model that you spoke about when we met last time? That you plan to bet on the ideas of other people, you would want to put your money on that. Are you looking at exploring that opportunity now?
I made that comment in the context of services.
Yeah.
I said we don't have the bandwidth to focus on services right now and do something completely on our own and dedicate a big part of the organization. If we look at a services play,
then you would definitely be
probably
watching.
One of the strategies that we will be thinking about.
What are the future plans as far as Dalmia Cement is concerned? Are you also awaiting an IPO?
Only after we build significant momentum and significant scale, we will be thinking about it. So we are not looking at going public right now. We are just focused in the short term on consolidating our position, executing well, and in the long term, we are looking at significantly scaling up our business.
All right, Puneet, all the best for your short-term as well as long-term goals. Thank you so much for joining us on Young Turks.
Thank you very much. It was a pleasure talking to you.
Puneet, here's wishing you the very best of luck, and we do hope that you conquer Mount Everest. Time for a break, but when we return, the founders of MediAngels, a venture that focuses on distance diagnosis, in a tutorial with Kaval Singh of Helion Ventures.